been investing in emerging markets for over 20 years. So in retrospect, this provided a very good learning opportunity to learn about the asset class as I went through many periods of volatility and market turmoil in the past, which allows me to understand the markets, how they work under stress, and position and think about how to position the portfolio forward. Emerging markets is attractive for one of the main reasons being the carry and the yield. If you look what's happening with developed market yields, the Eurozone, even in the US, and of course in the UK as well, the yields have been quite low for a long time as a consequence of the monetary policy arrangements by the main central banks. Emerging markets, on the other hand, yes, it is a riskier asset class, but if you look at the yields at the moment, we're obtaining yields of about 7%, 7.5% on average for the asset class, which we think is getting attractive even further compared to where they have been in recent months. So the valuations are improving, so we think that investors should start looking, especially now that the valuations became cheaper over the last few months. Emerging markets, as most bond asset classes, you have to make sure, of course, you're going to get paid at the end. So in other words, from a bondholder's perspective, you need to understand what is the default risk of a security. Does the issuer have the ability, the willingness to continue making the payments? So understanding the fundamentals, what's driving, whether it's a country or a corporate, is very important, and assessing the risks and make sure we're getting paid for the risks that we're taking. The fund is very flexible, so we can invest in hard currency sovereigns, corporates, and also local currency debt. So the idea is to look at the market conditions, both on a global basis, but also on an issuer basis. So looking at individual countries, individual corporates, and to see where we are getting paid for the risks and where we're not getting paid for the risks. So of course, the portfolio would always be reflecting the ideas that we think are the best. So the fund, besides being flexible, is a best idea funds. So we start from a very wide investment universe, and then we narrow down to about 100 or so issuers where we think are the best opportunities at the moment.